So next up, we're going to talk about why we're here. Access to capital, access to investments, and reimagining our communities in the ways that many of you in the room can access those networks so that we can grow our businesses. And I'm so honored to introduce our moderator, Mary Helen Aldez. She is Program Director of the Hispanic Chamber of Commerce in El Paso. Mary Helen leads the Women's Business Border Center, WBBC, which prides itself in giving future trailblazers the foundation with which to start. The border region is not only rich in culture, but also rich in entrepreneurial spirit. Right, El Paso? Okay. We're going to showcase a lot of El Paso today. And the WBBC is home to many women who have pioneered a vision and successfully acted upon it. I'm also especially proud about El Paso because we have a terrific leader in Cindy Ramos Davidson. She could not join us today, but it's just terrific to see people at the local level that have such a great reputation and are models for other cities to follow. So grateful for their leadership. So without any further ado, we welcome Mary Helen Aldez to the stage.
Well, good morning, everyone. And it is my pleasure to be with you this morning. Cindy does send her regards. She's on the board of directors for the Federal Reserve Bank, and we do have the president, Lori Logan, in El Paso, where she's hosting this week. So she does send her regards, but it is my pleasure to be with you this morning. And this is such an important session, isn't it? Access to capital, reimagining access to capital for Latinos. Latinos are the nation's fastest growing entrepreneurial segment, but despite the growth, Latino entrepreneurs, they face so many barriers than their white counterparts, accessing debt and equity capital across the continuum. Studies have found that while Latinos start small businesses at the fastest rate of any demographic group in the country, they lag the investment approvals. In fact, only 20% of Latino businesses that have applied for capital loans above $100,000 were approved, compared to 50% of our white-owned businesses. Now that is a very big problem, don't you agree? How do we break down this implicit bias many Latino entrepreneurs face when applying to access to capital? How can we combat these stereotypes that we're risky borrowers, which greatly impede our ability to start and scale our businesses? And what can financial institutions do to ensure Latino entrepreneurs and small business owners enter and participate in the capital investment community? Without access to capital, there is simply no business. So let's get to the bottom of this. Today, I am joined by a great panel of speakers. They're phenomenal, that have implemented products, services, and programs and financial organizations that have met the needs of our Latino-owned businesses. I am so happy that we're going to get started. So we have Carlos Antequera, the CEO of Novel Capital, that you'll hear about more. The infamous Ms. Janie Barrera, the founder from LiftFund, which has some amazing loan products as well. Ruben Barrales, Senior Vice President, External Engagement, Diverse Segments, Representation, and Inclusion from Wells Fargo, a great financial institution that is a very active SBA lender and has so many different products. And last but not least, Mr. Martin Guerrero, the Global Policy Partnerships and Impact Specialist for Block. So please welcome our distinguished panel of experts. So let's go ahead and get started. So welcome, everyone. Thank you for being here.
Good morning.
Good morning. So let's start with Carlos. Why do you feel that there are so many, it's hard for Latinos to get the access to the capital that they need?
Thank you. Good morning. There are just so many layers to that question, but a couple that I can relate to. So I'm a second-time entrepreneur with our current company, Novel Capital, and one of the things that you notice with technology companies that are trying to get capital, there are two main ways in which many startups get that capital: family and friends, or VC equity. So when you think about a lot of Latino entrepreneurs, how many have the family and friends that can hand them a few $100,000? That's a place to start. And then when you look at the traditional VC equity process, it's really based on networks. Who do you know? Who trusts you? Who's going to make the introduction to those VCs? And so, right there is the other challenge, right? So if you don't have those networks, if you didn't go to the right college, if you don't have those connections, then it's very difficult to get started.
Most definitely. And I forgot, I just dove into the discussion. I'm so sorry. But I wanted to share, there's some index cards in your table. Please, if you have any questions, use those index cards to note down your questions that you have for our panelists at the end of our panel. And please capture the moment. If you're posting on social media, please use the hashtag Let's Advance. So Carlos, before, I know you shared about why do you think it's hard for Latinos to access capital, but how did you start your venture in starting your company and helping the needs of Latinos?
Yeah, so Novel Capital is a fintech startup based out of Kansas City. We leverage real-time business data to provide growth capital to early-stage entrepreneurs. The reason that I started Novel Capital is because when I started my first business in the early 2000s, it was a software company focused on edtech. I had to go through the growth challenges of trying to get capital for my company. Just to give you a note of my experience, when we were about 4 years old as a company, we had about $1 million in revenue, growing, serving about 100 school districts. I saw the opportunity to continue to grow at an accelerated pace, so I did what I learned in my MBA, develop a business plan, went to visit my friendly banker, and quickly learned that I didn't have assets or collateral to get a loan. So no surprise there, right? So then my mentor said, well, you're a software company, you should go get money from angels, VCs. After 8 months of doing the rounds in the Midwest, I ended up with $0, right? And so I personally saw the challenges of growing and had to grow organically for 10 years until we were able to get capital. And at that point, over the next 3 years, we grew as much as we grew the previous 10 years. So I could see also the power of capital and the difference that it can make to accelerate growth in your business. And so that's why we started Novel Capital a couple of years ago.
Awesome. Thank you for sharing, Carlos. And Janie, let's turn it over to you. How did you get started, and what would you like to share with our audience a little bit more about Janie and LiftFund?
Well, LiftFund's been around almost 30 years. We're a micro and small business lender. And what's interesting about Carlos's story is the fact that LiftFund, too bad LiftFund wasn't there for you, right? When you wanted to get started, because that's the typical small business owner that we want to be able to tell and be able to provide this access to capital. But what I think is interesting too is the lesson that you learned about you need to go borrow money to make money. And in our community, what happens is that our community stays away from debt. They don't see debt as a way to grow. And so our job is to educate that it's good to be able to borrow money and pay it back on time, and that's why your credit scores will increase. So I always say to them, how do you think rich people got rich? It's not by using their own money. It was by leveraging other people's money and being able to grow. So I would say for the first, I'd say 25, 26 years, we were in the laboratory stage, if you will, right, growing and trying to grow this not-for-profit. We actually, I was saying, back in 1994, Wells was one of the 4 banks that we put together a loan pool of $125,000. And I see Ramiro there. At that time, he used to work for Levi Strauss Foundation, and Levi Strauss gave us our first $50,000 grant. And that's how we started this organization. No equity, right? And so now we're in 15 states. We have over 100 employees. We've dispersed over almost $500 million. We have a 96% repayment rate, and most of our portfolio is the Latino community. And so that proves to you, right, to us, that the Latino community is not risk population. We're able to prove now with our numbers what we can do. So much so, the McKinsey, Scott, gave us a $10 million unrestricted.
Congratulations.
Thank you.
That deserves a round of applause.
So now, what took you 10 years, Carlos, took us 25, 27 years, but now we have the equity to do something, right, to do even more and reach more people. So it's quite exciting to be in this industry right now, and we need help telling people that CDFIs are out there right now wanting to help.
And changing that perception of not using their own money, right, and getting borrowed money to do that. How about you, Ruben? What would you like to share a little bit more about yourself and how you feel what the barriers are for Latinos accessing capital?
Thank you for having me. So a couple things. One is, from my perspective, my parents immigrated here, no formal education. They worked with their hands, laborers. My father was a bracero and eventually started a small business, a roofing company out of our garage. And my mom cleaned houses and worked in canning factories and eventually opened up a little coffee shop in our neighborhood. But what strikes me is the difference between Latino small business owners and Latino entrepreneurs. Because in reality, my parents were self-employed, working out of the garage, walking a couple blocks to the coffee shop and all that. There really wasn't a growth mindset. There was obviously, try to build up as much wealth, as you can by working, hour after hour, versus an entrepreneurial mindset. So that's one thing I think in terms of the numbers. Many Latino small businesses are small businesses, but they're not necessarily growing enterprises. And I think that's why technical assistance, from my perspective, is such an important tool that CDFIs and others provide. And that is, I want to mention the four-letter word that I hope people get out of today, which is CDFI. Because big banks like Wells Fargo, which provides millions and millions of dollars in loans to Latino small businesses specifically, we can't do it all, and we can't do it without partners like CDFI, like LiftFund, and others who actually can be in the community. But I think as much success as LiftFund and other CDFIs have had, I think there's still a very well-kept secret for Latino business owners. And so we need to do a better job of partnering. One last thing I want to mention is I'm thinking about raising capital, fundraising, right? Debt, equity, or debt or equity. It strikes me, many of you are business people, some of you maybe have been involved in politics or running nonprofits. Fundraising is fundraising, whether it's for your business, whether it's for your candidate, whether it's for your nonprofit organization. You've got to be ready for lots and lots of no's. Ideally, you've got a great team, which in this case means lawyers, bankers, accountants, that can help you put together the best presentation. And it's really hustling. You've got to hustle to raise the money in any of those kinds of endeavors. And there's actually an art and a science to it. And so learning from people that do it well is a way to be able to do it well ultimately.
Oh, most definitely. And Martin, what would you like to share with the audience this morning, a little bit about yourself and how you feel, what are the barriers for Latinos in accessing capital?
Absolutely. A lot of points that Ruben just spoke to hit with me as well, being a first-generation Mexican-American and seeing my dad start his own business and help. I was his technical assistant back then. We didn't have all the tools that we have at Square now, so it was a lot more difficult. And seeing friends and family starting businesses, and I just thought, that's just something you do, and it's easy to do. You just do it. And lo and behold, getting into a role where I am now, where I provide a lot of technical assistance, it's not easy. Right? And I see a lot of the challenges too, especially the capital. I do a lot of technical assistance with micro-entrepreneurs, growing entrepreneurs, and a lot of it is just hesitation to open up their books, right? Sharing their financials, sharing their personal information. There's still a lot of hesitancy there, and CDFIs will make great partners there. The language barrier can still be there, right? If they're with financial institutions that don't provide, language access, that's also a barrier as well. So providing tools and services completely in Spanish will help them overcome that.
Most definitely, and sharing with them that technology is our friend, right?
Yeah.
It's not our enemy, it's our friend. And so Carlos, as a capital provider, they face a cost of capital that varies depending on where you are in the capital spectrum. How does this affect you and the entrepreneurs that you serve with the cost of capital?
Yeah, and going back to your first question, right? What are kind of the barriers? You start with getting capital. So if you think about the number of fund managers on the VC side that are Latino or minorities, right? That's a very small number. Well, how do you get to become a first-time fund manager? You need to raise money again, right? So it's kind of like the chicken and the egg. And so on the debt side, the same, right? So we were fortunate to be able to raise last year $110 million to be able to provide to entrepreneurs. It took us about 3 years to do that, right? Because as soon as you go to somebody and ask for the capital, and share your plan and your thesis, they say, well, what's your track record? Right? Well, if you don't have a track record, then they're not going to give you the money. Well, how do you create that track record without the money? And so we had to the point I think that Ruben was making, we had to raise a small amount first to prove our thesis on a small portfolio, and that was 200 and something meetings, right? And most of those were no's. People that don't get it, people that don't trust you, say you haven't done this before. So so that goes to your question, which is the cost of capital then is based on who is going to be able to provide us that capital. And so we have investors that we have to return the money to and meet a certain criteria of that cost of capital that they want for the risk that they're taking. And so if we have a cost of capital and a return that we have to provide that is at a high place, then naturally the amount I have to charge my cost of capital is going to be higher and above that. So it is that whole cycle that needs to be understood. It's not just the desire to provide low-cost capital, but there is an inherent cost that you as a provider have, especially when you're not a very large institution.
Most definitely. And Janie, I know that LiftFund has some very favorable interest rates now. Could you share a little bit more and expand on that, please?
I'm chuckling because Carlos is a for-profit CDFI, right? I mean, because the way he describes his business model is a CDFI almost, right? Because CDFIs are not banks. We don't have any depositors. And so we have to rely on investments and grants to be able to do our work. And so I have to do a shout out to City Public Service here from San Antonio, because utility companies also can invest, not only banks, but they've invested millions of dollars in LiftFund, where we are able to borrow money and then at a cost, right, to be able to put it out into the hands of the hardworking business owners. So one of the things that we thought of over time is how, as a not-for-profit, we have to cover our costs, we have to pay the bills, we have to keep the lights on. So we do have to, pay for, the customer does have to pay interest on the loans. So as we thought about it, how can we raise money to be able to bring that interest rate down? And two of the cities here are doing that with LiftFund. San Antonio and El Paso literally buy the interest for the customer to 0%.
Wow.
So we're able to get that. That's great.
That's great.
And so for every $250,000 that we'll get in a grant from the city, we're able to disperse almost $1 million with those monies at 0%. And we just did a study on those portfolios. How are they performing? And that portfolio actually performs better than the rest of the portfolio. Why? Because the cash flow is there, right? Now all they're doing is paying back principal. And it makes the CDFI whole, because now we don't have to rely on the customer paying the interest. The grant from the city paid the interest. So what if we were to raise money for that, for CDFIs, from foundations, institutions, government, to be able to do that? Because again, we're not banks, but we have to run like businesses, and we have to be entrepreneurial ourselves. And how do we reach our community? What's the best approach that we can take to be able to reach more people? So hopefully we can come up with other ideas during this conference to be able to say, yep, we're going to put the hands into the hardworking men and women that run these small businesses.
Most definitely. Thank you, Janie. Thank you for sharing. Ruben, would you like to elaborate on that?
Well, one thing that I want to emphasize is that we talk about the disparity between Latino or diverse small businesses and others. It's not unique. It's systemic. I mean, it's the same issue that individuals of color face in society. So it's not somehow unique in terms of the business community. And so as a large institution, the way that Wells Fargo is approaching it, obviously we have our portfolio, we have our products, but we've decided to partner with local entities, CDFIs, through our Open for Business Fund. If everyone can remember way back to 2020, when COVID first hit and all, and the PPP program, we made it our mission to provide loans to diverse businesses, which, given the regulatory environment and all, was kind of an effort to be able to identify diverse businesses, because there's some restrictions on how you do that. In any event, we found that through the fees, and here's something I think a lot of people didn't recognize, is that the banks participating in PPP were giving fees for that participation. So our CEO, Charlie Scharf, from the very beginning said, we're going to take any fees that we get, we're not even going to add expenses, we're going to take all those and put it into a fund for diverse small businesses, so our Open for Business Fund. And we ended up with $420 million. And our approach was, number one, and Jenny Flores, some of you might know Jenny Flores, who runs our small business growth pillar in our foundation. She said, got to get the money to the entrepreneurs. So how do we do that? Give it to CDFIs so they'll get the money out. Second, we got to get the technical assistance to, so partner with groups like LBAN, like US Hispanic Chamber, CDFIs, and get technical assistance. And our next approach now, the balance of those funds are going specifically to a handful of cities to see about identifying within each ecosystem, much like Aspen is doing, so I think we're on the same track, how do we help influence? So we're doing about $20 million in each of these particular cities to help diverse small businesses. So our approach is definitely to local, local, local. One last thing I want to mention, I forget the URL, so I want to make sure I get it right, otherwise I'll send you to some, who knows what kind of site. But so we just launched our what we call our Small Business Resource Navigator, which helps small business clicks on there, answers a few questions, and then it helps them to identify an appropriate CDFI that they might be able to go to. So again, trying to educate small businesses. So it's bizresourcenavigator.com through Wells Fargo, bizresourcenavigator.com. Again, trying to connect to local CDFIs for these small businesses.
Great. Thank you for sharing, Ruben. And Martin, what would you like to share about Block and the cost of capital?
I wasn't told this was an open notes quiz.
Oh.
Ruben's side.
Uh-oh.
You hit it on the head. Technology can be your friend, right? And so at Block and Square, we're in a unique position to where we can offer loans to businesses based on their processing amounts, their mix of business, their mix of customers, right? Just looking at their overall health of their business, and the algorithms allow us to do that. So we offer loans based on the health of a business. We don't know whether you're female, we don't know whether you're Latino, we don't know any of that information. All we see is a healthy business. And so then we're able to then calculate a loan that we feel you can actually repay versus, a loan that just, here's a large loan, take it, do what you will with it. We like to size those, and the average size of our loans, the most recent number was $6,750. So for most, that's a really, really small, what folks consider a micro loan, but it changes businesses, right? Just having that much money can change the trajectory of a business, whether that's buying a new food truck or new equipment or inventory for a business. It can really, change the trajectory of them in a very positive way.
Sure, most definitely.
How can we get your rejects?
I don't know that we have that.
Oh, well, that's interesting. Okay.
We can work on that.
I know. So Carlos, technology, I mean, you've scaled your business providing some very unique different technology tools. And what role has technology played in your role in having access to capital for other Latinos? Could you expand on fintech and how that played in mitigating funding gaps for Latinos?
Yes, similar to Square, we leverage the data of the business, right? And so by being able to read that data real time and looking really at the performance of the business, we don't know, gender, race in the beginning. We just look at the data. If it's a good business, then we'll have a conversation with you. And we're targeting generally software and technology entrepreneurs, right? So we're really into the technology. We're leveraging technology to help technology entrepreneurs. And those entrepreneurs that, again, generally don't have assets. If you think kind of the software entrepreneurs at the earliest stage, they have challenges to grow, but they have the ability to scale very rapidly when they leverage capital. And so we try to provide capital generally between $300,000 to $5 million that is really strategic and long-term, that allows them to hire a couple of salespeople, that allows them to get engineers to get that next product rollout and really expand their market or access a new market. So those are the opportunities that we leverage, and we're constantly looking at how do we leverage that data to also help the entrepreneur. So now we're working, for example, on analytics of all the numbers that we crunch to make our decision, expose that to the entrepreneur so they can better run their businesses, right? So it's how do you continue to leverage technology so they can continue to grow faster.
Most definitely. And Janie, so now in 15 states, and what kind of innovation and different technology tools have you utilized in LiftFund?
Sure. We don't have feet on the ground in all 15 states because of technology. You know, there are no boundaries anymore, and there are no borders anymore. So what we did was the population, our community that we serve, average FICO score is less than 600 points, right? Not bankable. So cash economy. And what we've done is we've captured data from 1994 when we started. And a smart intern that I had about 12 years ago, I asked, and actually Wells Fargo helped pay for this, you know, let's create a profile of a good paying customer and not so good paying customer. And it's evolved to now an algorithm. There are 12 questions that we ask. One is a FICO score. We already know that's bad. But then we'll ask assets, liabilities, the type of business, blah, blah, blah. And then it'll tell you within a second, yes, the probability of getting a loan at LiftFund is good. Continue the application. Or no. And if you change the amount that you're requesting, you know, if you ask for a $25,000 or $50,000 or $100,000, it may say no. But if you put in $10,000, it says yes, right? So it depends on all that algorithm. So it's an API that we have available to share, and that's how we think we can reach more people. But then, all right, then it's the hard part to your point. We still have to put that technical assistance into it, and we want to ask about the financials. That's where we're different than the fintechs. Because now we have to go in there and see the information. We do still ask for bank statements and all those kinds of things to clarify, or to confirm, I should say, the information that they put into the API. So we still have that hand-holding thing that we, one day maybe we'll let go, but we still think that that's why we have the 96% repayment rate. Because the customer has a relationship with us. Not necessarily face-to-face, but we have it, you know, through, you know, the phone, or now, what do you call it, Zoom and everything.
All those wonderful
Is
platforms.
that what you call it? Zoom? Is that, wow, I'm going to try that.
And Ruben, you were sharing about the Biz tool. Are there any other technology tools that Wells Fargo is implementing to connect with business owners, and especially Latino business owners?
Yeah, we are, but you know, the interesting, and where I have a little bit of optimism is if you look at kind of a parallel with the mortgage industry. You know, banks ruled the mortgage industry. Now the top mortgage lenders are fintechs. So, you know, you can see the same kind of dynamic potentially working for small business loans as well. But going back to the issue being, you know, the systemic issue, when you think of like when someone approaches a bank with a new idea for a business, an individual, to Carlos's point, you know, might not have a network or family and friends to provide support. So the bank will say, well, let's see your credit score. And the person might pay rent every month on time, but that doesn't count. And so there's some systemic issues that make it harder sometimes for Latinos. But again, I think the growth of fintech, quite frankly, the growth and maturation of the Latino community itself. We're a young population, but we're creating more highly educated entrepreneurs every day. And so I'm very optimistic about where we're headed as a community in terms of small business and entrepreneurship.
Wonderful. And Martin, would you like to share some more innovative technology tools that Block and Square are implementing now?
Yeah, a lot of it still is, to your point, the hand-holding. Like in my role is technical assistance, education, right? Helping folks digitize their business. I go back to my dad's example, and when I was in high school, the high-tech thing that he had in his office was a fax machine. So I don't know if you guys remember what a fax machine is, but that was the most high-tech thing he had at the time, and the rest was just paper, right? Receipts, invoices, just everything, cash, checks, everything was in paper all over the place.
Carbon copies.
Carbon copies, yeah. And at the end of the year, like tax time, you know, for me, it was a real fun time. I was in high school at the time, and just like, I didn't know taxes, of course, and I had to translate for my dad. So I see all the tools that we have now, and we've essentially digitized all those tools today, right, for folks to be able to take payments, invoices, you know, e-commerce. All of those tools are available. And then we've just recently launched all of our tools and services, which is now over 35, all completely in Spanish, to overcome that language barrier. Some were already there, but the main one being loans, all fully in Spanish now as well. So folks can come in from start to finish, work with us, partner with us, all in their preferred language.
Wow, that's wonderful. And Carlos, how can financial institutions build more trust with the Latino community?
Yeah, there might be other folks that you know might have a more direct experience to that. From my experience, I think it's some of the elements that we've been talking is that education, right? That letting folks know, just understand how the capital ecosystem works, right? Even in the technology sector, I ran across a lot of entrepreneurs that I think Janie was mentioning that debt is bad, right? And no, if you use it as the right tool at the right time and you don't over leverage, then it'll actually help you grow, right? So it's understanding what your cost of capital is, right? So yeah, I think it's kind of the basics, and I think large financial institutions have the teams and the reach that can really help on that.
Thank you, Carlos. And Janie, how do you feel would be helpful for financial institutions to build more trust with Latino communities?
I would say help us advertise more. How do we get the banks to campaign with us to say that we're here for the community and want to help, and that it's okay. And that, I guess the flip side to that is some people don't trust banks either. So we've got to figure that one out too. But again, to Carlos's point, education, right?
Yes, most definitely. Ruben, would you like to share?
Well, yeah, I think number
Because you're
one,
on the
we
other
have to have services and products that serve people. And you have to know who your customer, who you're trying to reach. And that means partnering with the right partners in the community so that we can get resources out, get capital to Latino small businesses.
Awesome. And Martín, what would you like to share?
The education piece is huge for me, and then partnering with established organizations. We recently partnered with USHCC and Hello Alice to release a report on the struggles that Hispanic business owners are facing currently. So putting information out like that, again, the language barrier is a huge one. And just, again, the way we work, offering loans that we feel these businesses can repay, right, versus over-leveraging them, over borrowing with them, and just giving them loans that we think they're able to repay based on the overall health of their business.
Awesome. Well, thank you so much. And I think right now we'll turn it over to any questions in the audience. Would anybody like to ask any questions to our panelists?
Oh, we answered everything.
Okay. Would you?
It's hard to see with the lights.
I know.
Yeah.
There's someone back there.
It better be. If it's not, we'll make sure it is. I think using my parents as an example, I think they need to be educated. There needs to be outreach in the community. So that's where I think like a Latino Chamber of Commerce can be so powerful to reach out to Latino-owned businesses that are really just waking up every day, working, and then and closing up for the next day, and just being able to provide the resource. But you have to be able to give them through technology or through very substantive meetings information that they can use right away.
I'd like to share that microlending started in developing countries, right? In Latin America, for example, microfinance. And so newly immigrated know about that. The difference, though, is that the way you run a microfinance organization in a developing country versus the United States, it's totally different. So we've got to be able to help, again, educate people of how the U.S. works with money. It's not like the peer group lending model that's in, Bolivia or wherever it may be, Chile. So it's the way we do things here in the United States. So we've got to be able to transfer that information to them that says, look, we will help you navigate through the system. Yes, it's hard, getting through all the paperwork, but we can do that. And our website is in Spanish as well, so they can go online. And then even though you may be newly immigrated, you can get an I-10 number, hopefully a driver's license, a matricula, or these kinds of IDs that are available. And CDFIs, in our case, you have to have at least 2 of the 4, right? Of the 4 pieces of identity. So because again, we use federal money, we borrow from banks, we all that. And so there are rules and regulations CDFIs have to deal with as well that have to comply. And right now we're in the process of becoming SOC 2 compliant. So that means the privacy issues and all that has to be in place. Right. So anyway, it's just it's a model that can work. We just have to educate our folks.
Most definitely. Ruben or Martin, would you like to share anything with the question?
I think I already did. Maybe Carlos.
No, good. Okay. Any other questions?
One in the back.
Janie?
Well, first of all, there were grants that were available through municipalities that were out there, hopefully that helped small businesses during that time. And the way we're doing it is we're looking at, really, COVID started in 2020. So we're looking at 19 numbers. And forget about 20 and 21 right now in terms of our underwriting. What were you like there? And then what's your plan to move forward? So Cecilia, you need to come and talk to me. What do you need? Well, how much, our loans go up to now, we started as a microlender, our loans go up to $500,000 now. So from $1,000 to $500,000. We also work with the SBA with the 504 program. Those go up to $10 million. So let's talk. I mean, we're not the old Acción, as we used to be called a long time ago. We're a new breed of really aggressive CDFIs that wants to get the money out.
And our sister Women's Business Center is in San Antonio as well. So you can get some additional technical assistance there in your area, in your respective area.
I think one of the things we learned through the PPP program in 2020 was that businesses that had a relationship with a bank, our bank, for example, were able to access PPP loans more, and others weren't. And so I think that's part of it as well. It's basically developing that relationship with a banker so that you can tell your story, and so that that person can escalate if you feel that you do qualify for a loan, but for some reason the institution isn't cooperating, if you will, escalate it. So if you have a relationship with a banker who can help you escalate the issue and help to tell your story more effectively.
Yeah, and another thing we're starting to do is creating loan loss reserves with grant money as well, so that we can take that more risk. And so right now, with these dollars that are coming out from the government, we're asking for loan loss reserves. So that way, because again, we're a bank. We're not a bank, but we have to be good fiduciary, responsible stewards of the dollars that we have. And when you try to leverage money, we're just like the CDFI is just like a small business. You have to have a strong balance sheet to be able to borrow money. And so all of these things combined, I think, investing this way would help many more small businesses so that we can take more risk.
Yes, and I would also recommend to subscribe to Hello Alice. They're part of the National SBA Navigator Project. They're one of our spoke partners, and they do release a lot of newsletters with a phenomenal list of grants for small businesses that are available. So I would definitely subscribe to Hello Alice and see what might be available for you too, as the grants part. Any other questions?
You have one in the back,
in the
I
back.
think.
Yes, sir, in the back.
Yeah, I'm Julie Martinez with International. We have a number of States doing micro lending in Africa or South America. So could you explain those differences? And are there, more programs? These companies really need that, $1,000, $2,000.
Small, micro.
Hire an extra employee.
Right.
So, and to me, I see a void there.
Sure. Where are you located?
Well, SER's all over the country. We're in like 26 states.
SER, S-E-R, SER National Progress for Jobs.
Okay. So yes, if you look up CDFI on the web and see if there's a CDFI near one of those communities, right? And the way that we look at the micro lending world is almost like keeping your checkbook, reconciling your checkbook. How much money do you spend? How much money do you make? What do you have at the end of the month, right? And you have to have collateral. Collateral meaning something of value. If you're a restaurant, we'll take forks and knives. If you're, one quick story, we used to take livestock. I was down in South Texas at the Colonias, and the lady had a restaurant in her front, on the front part of her property, and then she had goats grazing on the side. So we took the goats as collateral. A few months later, I went back and looked at them and said, I looked for the goats, and she looked at me funny and said, they were on the menu last week at lunch. So I told the staff, no, guess what? No more livestock. And so time goes on, and we have to take pictures of collateral and put it in the borrower's file. And so I walk by Alma's desk, and I see a picture of a goat on her monitor. Said, Alma, we don't take goats or livestock. She goes, Janie, don't worry, it's the land where the goats are standing, that's our collateral. And I said, okay. So, and the reason we do take collateral, some CDFIs don't, is because we've learned if the customer doesn't have skin in the game, they're not paying you back. So we've got to have, there's ownership, right? And there's pride. And we're building assets and wealth that way, through themselves and through the things that we've learned, right? So look up your local CDFI, or if you're in any of our 15 states, call me. My number should be on the website somewhere. But and let's figure out how do we do that, because now with this API, you could have that API on your computer. You put in those 14 things and say, look, LiftFund's going to be able to help you get on the web, right? So if we could do more of that kind of stuff.
Well,
Or
thank
visit
you.
Wells Fargo Biz Resources Navigator.
If you have a credit score at 700.
Well, then it's time for a close. I mean, was there any final thoughts that you would like to leave, Carlos, for our audience today?
I think just reinforce the different elements of the ecosystem, right? It starts with I think education at the how many engineers are we graduating that are going to be the next entrepreneurs, right? That are looking for growth and scale. Those are the entrepreneurs that, when they're successful, are going to invest in other Latino entrepreneurs, other minority businesses. So I think sometimes you can focus kind of on the latter part of the problem, but really, if you don't fix all the parts of the ecosystem, I think challenges will continue.
Awesome. Ruben?
I think it's that raising capital is hard. I mean, it's not hard for Latinos only. It's hard. It's hard work, right? And so build your team and build your network of folks who have done it successfully that can help you do it. I think that's probably the key for a lot of growing entrepreneurs.
Awesome. Janie, any final
Well,
last
building on that, find people that have a success record, right?
Yeah.
And build on that. I think a lot of funders that want to find the new idea. Well, really? Why don't you invest in something that's working, and help that grow? And I have to do a shout out to Lupe Mares, who runs our El Paso office. She's over there. So you talk to her too about how we can be working more as a community together.
Most definitely. And Martin?
Well, number one, thank you to any of you that are technical assistance providers in the room. I've probably partnered with a few of you out there. If you're looking to partner, you can reach out to me as well. I know you all are out there on the ground doing the actual work with these businesses, so thank you for that. And again, it's just the education piece, letting these folks know that they need to have their financials in order. They have to be ready to get capital, right? What we see a lot, what we saw during PPP and the Restaurant Revitalization Fund, they weren't ready to take that. They needed that capital desperately, but they weren't ready for it because they didn't have their financials in order. So having that in order, getting that ready to go, to be ready for when that next opportunity is going to be key.
Awesome. Well, I wanted to thank everyone for your time and attention this morning. It's been a pleasure and a delight to moderate this panel. I represent the El Paso Hispanic Chamber of Commerce, and we thank you so much. Thank you. And we've had established relationships with the Department of Commerce and the Small Business Administration for many years in providing that technical assistance that's needed for small businesses. And I would just highly encourage you to visit the SBA.gov website. Under the administration of President Biden, they've appropriated so much money to expand the network of women business centers. And those are the technical assistance providers that are available in pretty much every state of the country. So visit them, visit our small business development centers, our SCORE chapters, because these programs and services are free and available to all of our entrepreneurs throughout the country. So thank you for your time. I hope you enjoy the rest of the summit. Thank you for this opportunity, and I hope you all have a wonderful day. Thank you.
Thank you.